Thank you so much, Ahmed, and hi everyone. It's a pleasure to be here. And you really are in for a treat today. We have a superstar, let's say, panel with us. And I just want to introduce them quite briefly. So we're joined by Laura Turner, principal at Agronomics, based in London. We're also joined by Lejjy Gafour, CEO at Cult Food Sciences from Canada. And last but not least, Steve Molino, the principal at Clear Current Capital, based in New York City. So, as Ahmed discussed, we're going to be talking about, investor perspectives and what they think about investing in the future of cellular agriculture. And of course, investors have, so many options to choose from now when they're looking for cell-based startups. Everything from, let's say, cell-based meat, dairy, seafood, to specific cell lines, and even to some of the platforms, or even, let's say, biomaterials, bioreagents. So it's really exciting. But despite, let's say, this excitement, there has been, let's say, economic slowdown recently, and sort of a less, let's say, appetite for investors to invest in not only alternative proteins, but also in cellular agriculture. So we're really going to try to understand why this is happening, and also hopefully what your key takeaways will be from this discussion is how you can be well, let's say, prepared to face this, let's say, current economic climate and really understand the investors' perspectives. So to kick us off, I think it would be great, for us to just start off with a few introductions from each of our panelists. If you could just tell the audience a bit about yourself and your background related to the future of food technology field. Maybe we'll start off with Laura.
Great, thank you so much, and yeah, thank you, Ahmed, also for organising and arranging such a great afternoon. So yeah, Laura Turner, principal at Agronomics. I have been active in the space since 2019, and really, that was the beginnings of Agronomics being truly active in the field of cellular agriculture. And we define that as investing in cell culturing technology, so covering very much food, but also materials, leather, cotton, as well as precision fermentation. See the recombinant engineering of microbes to produce target rifle shot animal proteins such as dairy and eggs, and more recently enabling technologies. So have over 20 companies in our portfolio. We've raised 230 million sterling USD, sorry, to date, and yeah, very passionate about this field.
Thank you, Laura. And Lejjy, over to you.
Thank you. Nice to meet you, everyone who's watching this on the Zoom. So I'm Lejjy Gafour, CEO of Cult Food Science, and we are a publicly traded platform based in Canada, focused on making cellular agriculture part of everyday life. So we have a platform that covers across 19 investments, everything from consumer-facing products such as meats, coffee, collagen, all the way down to bioreactors. And we're focused both on creating new companies and products in the space. More personally, I have been in the cellular agriculture space for coming up on 10 years now. It doesn't even seem like the industry's been around for that long. And we're really focused on making sure that a strong ecosystem exists for this industry in the future.
Wonderful. And Steve, over to you.
Great, thanks, Dalal. It's nice to be here, and thanks, Ahmed, for including me on this. So I'm Steve Molino. I'm a principal at Clear Current Capital. And we are an early stage venture capital firm focused exclusively on the sustainable food and alternative protein space. And for us, while we do have the traditional VC approach from a return standpoint, we are a fully mission-driven firm. So our mission, in essence, is to facilitate the shift away from industrial animal agriculture. So we see animal ag as inefficient, unsustainable, and obviously inhumane to the animals in the food system. So for that and many other reasons, we invest in anything that could potentially hit on that mission. So that could be plant-based or cultivated meat or the entire cell-based space, fermentation, all the different types of fermentation. We're looking at molecular farming. We've done a bunch of enabling technology plays. So as new technologies come on that hit on that mission, we'll continue to focus on that. So it all goes back to that. But and then for me, myself, I've been in this space, we're focused on this space since 2017. So both as an investor and a mentor to various different institutions. And yeah, I'm excited to be here.
Awesome. And you can really see that all of our panelists are, strategic investors in the cellular agriculture space. So you're really lucky to have you all on this panel. Oh, so let's jump into it. I'm sure that, many of our listeners, especially the startups, are wondering, with this current economic climate, how is fundraising going to impact cellular agriculture startups? And what are you, let's say, currently telling prospective companies as well as your portfolio, with regards to how they should approach investors and how they should continue fundraising? So I guess my first question would go to Laura, and especially because Agronomics is one of the most active investors in this field. Do you envision that the firm will continue to invest at the same rate in 2023?
No, so thank you for such a good question. So even in last year, after I guess the market crash with the terrible invasion Russia into Ukraine, well, about this time last year now, we've still continued to invest. We made 7 investments last year, 2 of which were forming new companies, which I may talk about later, Liberation Labs and Good Dog Food. And even going into this year, we remain well capitalized. We have 20 million pounds on our balance sheet right now to continue deploying into new and existing opportunities. But what we have seen in the last year is it is taking time a lot longer to get deals done, and with that, it taking longer to not only get the term sheet, but increase scrutiny over valuation, and more aggressive terms coming in to the term sheets. So we are focusing a lot more on supporting the companies already in our portfolio, and making sure if they are seeking to complete a financing soon, do they have the cash runway to really get them through this tricky time. So we saying all that, we are optimistic that cellular agriculture is in an even brighter spot than just climate tech alone. And we are very optimistic to see a number of deals getting done this year and things start picking up again. Not to the same degree as what we saw in 2021 with those big bumper deals getting done, Upside Foods 400 million raise, every company 175 million, etc. But increased appetite and momentum building again.
Yeah, and I'm really glad that you have such a positive outlook for the future, and also to show that it really is up to good portfolio management to really be able to provide the best advice for existing portfolio companies. I guess going over to Lejjy, and considering that Cult Food Science has a portfolio of many early stage cellular agriculture startups, what advice are you telling your portfolio that's maybe a bit different to Laura at Agronomics, especially the ones that are looking to fundraise?
Yeah, I mean, ultimately, the fundamentals don't change. The saying goes, lean times make for lean startups, and that it still really is about actually being able to hit milestones as you want to, and actually prove that out and actually make progress. Because if you have customers or buyers that are legitimately showing interest in one format or another, whether you're B2B or B2C, that has power when it comes to raising, even when times are hard. You always want to point towards the customer, and especially now with the current climate, it reinforces that. You can get dragged into perhaps maybe even spending times on things that you might not think actually help your customer as a startup when times are good, let's say, when it's much easier to fundraise. So companies can even use this as an excuse to be like, hey, I'm not going to do XYZ anymore. I'm just going to focus on my milestones and the product development. And then at the same time, more tactically, for any group that's really early, I'm definitely generalizing, but let's say pre-Series A, there's opportunities to really take a look at your roadmap. And perhaps instead of trying to make a big leap of, hey, we're going from seed all the way to A with this huge multi-year milestone plan, is an opportunity to chunk it down into a smaller raise with your set of milestones to really create that flywheel of traction and that proof sooner, with smaller amounts is really the game right now. But ultimately the fundamentals of traction and making product progress doesn't change even when times are harder.
Yeah, I really love what you said, then, and it's good to see that investor confidence and breaking up the round and some of these like extension, let's say, raises, right? And I think this has really been a question looming on a lot of startup minds. So I think, yeah, it's really good to hear you say that. And also like having more focus as well. I think, yeah, we've seen a lot of these very interesting, let's say, milestones that companies will achieve, even though they don't make sense commercially, but more from, let's say, a sales and marketing perspective. So great that you brought that up.
Yes, I would. Curious to the other panelists as well, but these days it almost seems like everything I will say Series A, the term bridge, seed, pre-seed, the terms are also amorphous. It really just does come down to, do you have the cash you need or not, regardless of what it's called.
Yeah, absolutely. And I guess, Steve, going to you where, of course, you recently had the Silicon Valley Bank collapse, right? And that's something that's like added onto, let's say the current financial climate. So how are things looking, let's say, in the US? And also with regards to your portfolio, which is quite diverse, as you mentioned, having a lot of plant-based as well as cell-based startups. So, are there, let's say, different pieces of advice that you would offer, let's say plant-based versus cell-based startups, and maybe the other segmentation within alternative protein as a whole? And of course, maybe just to elaborate a bit on what's happening with the SVB crisis.
Yeah, sure. So I'll first hit on the SVB aspect. So that was and continues to be a very interesting situation, but it's looking much better than it was probably a week and a half ago, where everyone was working over the weekends to panic and figure out how they could make payroll within the next week or so. So for anyone not familiar with that, Silicon Valley Bank was basically, it went under because they had a run on the bank, and the FDIC took it over. All that means is that for a lot of the companies and startups, a lot of the clients of SVB were startups. All the startups there, they had a bank account. Any bank account that had more than $250,000 of cash in it potentially was going to lose all of that, potentially again. So that was the idea. So everyone was thinking, if they just raised a big round, if any startup just had a big round, raised $20 million, that could become $250,000 overnight. Luckily, what happened is that that's not the case. The FDIC came in, and ultimately all the deposits were fully honored. So everyone was able to get their full amount of money, and now they're moving money to different banks that they feel more safe with. But that was very interesting, and that the feelings that were created during that are still percolating in the industry right now, especially in the US. So and I wouldn't say we're through it all. There's been ripple effects throughout the financial industry. Other mid-tier banks are still being hit really hard in the public markets. So I don't think we're done with that yet, but the really potentially negative outcome was kind of avoided, at least at the earlier stages. So that was a good thing. But we definitely had a couple of companies that were potentially going to be affected, and we were trying to help them figure out how they could find cash in the near term. Separately to your question about advice for our startups, if it differs between plant-based or biomass fermentation, precision fermentation, cell ag, the short answer is no, not really. At the end of the day, whether you're a cultivated meat company or you're a plant-based meat company, or you're an enabling technology producer, in the current environment, it's harder to raise. The time it takes to raise is going to be longer. The valuations are going to be lower. Investors are going to be pushing harder on diligence. So you really want to make sure that anything you're spending your money on is truly necessary. And I don't need to talk too long because both Laura and Lejjy hit on this really well, but I guess the short answer is no, there's not much of a difference on the advice that I would give plant-based, cell-based fermentation.
Yeah. No, that's really good to see that, I would say all of the three of you are quite aligned, and seem, quite optimistic that, there has to be a bit of adjustment from both sides, but definitely there are still opportunities for cell-based companies to, fundraise successfully in this given climate. And, I guess the next topic that I'd like to dive into are, what are some of the trends that investors are looking for? And then this is something for startups to also think about when they're dropping specific keywords in their pitches, right? And I think the first question actually I'd like to aim it at Laura, because you have like a very big, let's say, portfolio and quite advanced, let's say, cell-based startups. What are some of the like keywords that you're looking for within the cell-based space?
Yeah, so obviously, as I mentioned at the beginning, we started building our portfolio actively 4 years ago now, and with that have at least to begin with focused on trying to capture companies going after large conventional markets. So for instance, on the cultivated meat side, we've got Meatable covering cultivated pork. Most meat on beef, blue nalu, bluefin tuna, and then going into the precision fermentation companies. Dairy is a 700 billion market. We have 2 companies focusing on producing dairy proteins. That's Formo and AlGhawas Foods, and likewise have 2 companies focusing on producing egg albumin proteins. The Every company, as I referred to, and Onigo Bio, based in Finland, who we backed last year. So, perhaps a challenge that we are finding, maybe being a bit aggressive saying it's a challenge, but, as we review this landscape of approximately 300 companies globally, is the set that we're looking at, you do end up seeing a lot of companies produce, trying to produce the same product. And there are obviously differentiated technology play that you can go after, and especially on the the cultivated meat side, I want to highlight it's fantastic that both Upside and Good Meat have now received no questions letters from the FDA, noting they both have very different technologies. One is using immortalized fibroblasts, that's Good Meat. Upside uses their CRISPR technology to edit muscle cells to proliferate to create that large amount of cell biomass. So with that being said, I think there's room for new emerging early stage companies to come through, and I don't think it's going to be a case of one company takes the whole market. We are looking at these enormous $1 trillion combined markets, so there is opportunity for, hopefully, even in our portfolio, multiple winners. And just adding on to that, we've focused a lot on enabling technologies recently, and trying to assist the product focused companies on scaling. Hence why we founded Liberation Labs last year. This is a contract manufacturer for precision fermentation scale up, and they will be building the first dedicated facility in the Midwest in the US, 600,000 liters to begin with, to allow the likes of Perfect Day, Every, Geltor, Remilk, any precision fermentation company that is ready to commercialize in the US, start renting these bioreactors to be able to start getting down that cost curve to compete with the conventional protein equivalent, and to help really drive this sector forward from entering that commercialization phase to say.
Yeah, no, that's really fascinating. And thanks for the great, let's say, overview as well, and it's good to see that a lot of the, not only downstream, but a lot of upstream, let's say, technologies are also coming into the front light. And I think over to you, Steve. I think maybe Laura's covered pretty much a lot of let's say different technology themes and trends. But is there anything from let's say your team that you're seeing that's different this year? That's something that you really want to prioritize in terms of the focus for cellular agriculture startups?
Yeah, it's a good question, and I think for at least for us, I'm just speaking for ClearCurrent in terms of like the prioritization. For us, there's much less of a focus on companies that are trying to take a vertically integrated approach, like a lot of the larger, I guess you call them incumbents are. So like the Blue Nalus, Upsides of the world. That's a very difficult approach, and I do think that there's a first mover advantage for a lot of those companies. So what's more interesting to us is really these enabling technology plays, the B2B plays, where they're kind of like a rising tide lifts all boats, all ships kind of thing, where if a company is hitting on main hurdles or cost points within the supply chain of cell ag, whether it be cell line development, bioreactors, media, whether it be growth factors or another thing, that's something that's more interesting to me. And also on top of that, the key focus in my mind is really around anything that could address the major infrastructure hurdle in the space. So to Laura's point, like backing Mark and the team at Liberation Labs, love seeing that. 600,000 liters of capacity is absolutely needed. That is going to be a drop in the bucket for what we actually need to scale, and that's just for precision fermentation. It's not even for cultivated meat. So there's a large infrastructure hurdle. So to address that, there's either going to be some unique financing approaches to infrastructure. So I know like Synonym Bio is doing a lot of good work over there. Or there's going to need to be a really major focus on improving titers or yields so tremendously that the infrastructure required for scale up isn't as massive as it is today. So that's kind of the main areas that I'm looking into.
Yeah, no, very interesting, and it's good to see, yeah, that there's that focus on more of the biotech, let's say, solutions, as you mentioned, more of the upstream, let's say, B2B plays, and the other thing I would say as well is the different types of financing, right? And we've seen this a lot in vertical farming, where you have debt financing or even joint venture projects that are really emerging. So it's good to see that cellular agriculture is falling along the same lines. And over to you, Lejjy. I know that you've actually recently announced, at Cult Food Science, a partnership to launch your venture studio. So this is backing even earlier stage startups, right, through the incubation and venture building theme. And do you think that this will lead startups, towards like a way for them to support the ecosystem and be attractive for investors to support? Just curious to hear, more about this partnership.
Yes, that is, it really does come down to that note that both Laura and Steve said about infrastructure, and that being able to create a pipeline from the start for early stage founders and companies, with being able to use common use infrastructure and reduce that cost curve right from the beginning, so that a company is not stuck trying to figure it out after they've raised their seed round, for example, is huge for de-risking and having that commercialization and scale up pathway in advance. And it goes quite beyond that as well, to the point of vertical integration. When the industry first started, because the technology is so new, you have to do everything yourself. You don't really have a choice. You need to make everything from scratch. So you default to vertical integration. But now at this point, given the maturity of the industry, there's a lot of common knowledge and techniques that can actually be shared across, especially brand new startups, to really accelerate this ecosystem. And that's we've been focused on at Cult, with our partner on the venture studio side, Lejjy Ventures, of being able to create this common use infrastructure. So at the moment, we have everything from class 2 bench space for just brand new solo founders, all the way up to 20,000 liter production space for bioreactors for testing of bioprocess design. And it can lead to faster progress on milestones, and really about de-risking it for the investor as well, to have a more attractive package, because usually a lot of investors don't like to spend on CapEx. And in this industry, you would spend $500,000 on one machine. It is something that every company has to struggle with. So it's the question of making that available through a venture studio approach to help both new founders and companies.
Yeah, that's brilliant, especially having that shared infrastructure and really providing it across all stages of, let's say, startup development, and really, giving them a good sort of kickstart for their journey. And I know we're really talking a lot about, scaling up and these like strategic partnerships. And we know that, all of these companies, if they really want to be disruptive and make a difference, they have to do it through partnership. And that could either be amongst, let's say, their own industry or with larger, let's say, traditional food and agriculture players. And, I'm going to ask the first question to Lejjy, in fact, just kind of adding on to the venture studio piece, is how important will partnership between larger traditional food players be for the field moving forward?
Yeah, sharing is caring. So that's like a huge part of it, especially with the larger enterprises. There's definitely an interesting dynamic just because the production chain, let's say, all the way to the end product is so vastly different for a lot of larger food enterprises. And depending on which group you're talking to, some of them might not even be thinking about it. And they're not really thinking about how it could integrate into their total value chain of how they actually make money and get supply to consumers. But one part where it is really important for companies to interface with those larger enterprises is when it comes to that distribution and supply chain. So being able to have a back and forth with potential end customers to understand what those larger suppliers want to see in terms of what do they want to see so they will buy it from you to put it on their shelves so you can make money and grow as well is super important because consumer behavior is very hard to change. We're very used to buying and doing things a particular way. And that's really where those partnerships with larger enterprises come in, is being able to interface with your end consumers in the case of B2C as a startup. And then also to be able to really learn and scale on the infrastructure side as well. Large enterprises have bigger pockets, and there's definitely interest there in building out the larger infrastructure that's needed for this industry to grow.
Yeah, absolutely. And I guess also what we're seeing is, there are specific hubs across the world that are really pushing, let's say, this infrastructure to be built and also creating that, let's say, collaborative environment for startups and industry. And I guess my next question is to Steve. And I don't know if you can comment on, let's say, the precision fermentation sector with, companies such as Change Foods that recently announced a partnership with a government-backed entity, the Kazad Group, to set up a facility in Abu Dhabi in the United Arab Emirates. So do you envision that we'll see more partnerships like this in the future, and also across different regions, and how this will affect, companies on a global scale?
Yeah, no, it's a great question. And the short answer is yes, I do anticipate seeing more partnerships like this. And just speaking about Change Foods, which is a company in our portfolio, they're precision fermentation dairy focused on cheese as the end market. So they create real dairy proteins and lipids. And what Dalal is referring to, so basically Change, they formed an agreement with the Kazakh group out of the UAE that allows them to build a fermentation facility that will ultimately have 1.2 million liters of fermentation capacity. And for that occurred for so many reasons, but to this whole discussion of building infrastructure and investors don't like to pay for CapEx, one of the reasons that this is so attractive and so interesting is because it is mutually beneficial to the Kazakh group and the UAE officials and Change Foods, where Kazakh basically they have an incentive to want to draw new companies in this space to their region because it can help with food security, job security, things of that nature. And then for Change Foods, they now are not having to put up as much money that they would normally have to for the CapEx to build out a facility like this. It's not a small amount of money that this facility is requiring to be built. So for that to not be on the startup to figure out how to finance, not in its entirety at least, but still have it be mutually beneficial with these larger partnerships, that I see as an absolute trend that's going to be happening. It's already happening. I think it's going to be something that we're going to see that's widespread, and especially because each region is going to have their different competitive advantages. So you look at the UAE and where the Kazakh group is focusing on this facility, there's differences in energy prices, there's difference in shipping costs. It's just there's other things that make it really attractive for a startup like Change Foods to scale up. And I would have to imagine that there are other competitive advantages in different regions of the world that could be attracted to precision fermentation companies, cell ag companies. So I think it's absolutely the beginning of a very, very large trend that will be happening.
Yeah, fascinating. And I think, yeah, Laura, you also mentioned, one of your portfolio companies, Onego Bio, and their sort of partnership with cell ag company Perfect Day, or sorry, precision fermentation company Perfect Day, and that huge production platform in the US. So, going to Steve's point in terms of the competitive advantage, what would you say is the competitive advantage for that facility in the US compared to other regions across the world?
So just to clarify, so Onego and Perfect Days collaboration is not just specifically about bioreactor capacity, but more using in-house tools for optimization of strain development, etc. And that collaboration actually really came about because so the co-founder of Onego, this very clever gentleman by the name of Chris Landowski, is essentially the godfather of strain development using Trichoderma ricei. This is the fungal strain that Perfect Day commercializes. So it is the strain that has gone through the GRAS process in the US, which was completed back in 2019. Onego has uses the same strain with an exclusive license from the VTT Research Institute, which is where Chris was working, developing the strain that Perfect Day also has the license for. And so with that, Onego is able to leverage its relationship with Perfect Day to have access to capacity in the US, possibly in India and other jurisdictions as well, to accelerate their commercialization. And I guess this goes back to the point of how the I guess first generation companies have had to do all the hard work to get to market, whereas these new waves of companies coming through are able to essentially piggyback a bit, and still obviously having to do the work, but able to be on an accelerated track to get to market. And so with that, Onego is hopeful 2024 should have egg albumin on the market in the US. And I mean, just going back to the point about more just collaborations generally, I want to highlight the two precision fermentation alliances that have recently been announced, one in the US and another in Europe. And these are the sort of collaborations that also get us really excited, is this trying to promote discussion around regulation, as well as pushing the scaling point, also noting in Europe, sadly at the moment it appears that there is a possibility the EU could be left behind because they are taking too long to shape a framework for these companies to really drive forward. Hence why a lot of companies are trying to commercialize in the US or UAE, Singapore, even India now as well.
Yeah, absolutely. And going to the part of I guess the alliances, we can really see that, as of late last year, a lot of alliances have been happening in Asia Pacific, especially in Korea, Japan, China, really opening the dialogue on, creating, opportunities and sort of a collective voice to speak on behalf of, cellular agriculture. And I know with the UAE, it falls more on the halal regulatory guidelines as well. So, it's Yeah, it is quite unfortunate what's happening in the EU, but I have no doubt that, with that sort of global push, it's going to put a lot of, it's going to put, it's going to push the needle for the regulators and really hopefully move things a lot faster. And I guess like on the regulation and scaling front, and maybe this is a question for both Lejjy and Steve. So with the FDA recently clearing Upside Foods and just a few days ago Good Meat with regards to cell cultured chicken, do you imagine more alternative protein investors will want to look into this field? And will this also attract, let's say, sector agnostic investors to really, dive into cellular agriculture because of this large regulatory hurdle?
Yeah, I can jump in first. It really does help, especially even at a those who are less familiar with it. Regulatory and putting together dossier packages for data submission is complex. And being able to publicly see, hey, here's these companies in this space that have gotten a approval to move forward can actually be very important because it's something that everyday people and investors can look up, especially if they're not familiar with the space. It really does clear out the is this possible question and those doubts that you'd hear early on in the industry is it going to happen at all? And having these proofs publicly available really solves that. And it changes the dynamic of the conversation from for startups, especially from is this possible at all to here's how I'm going to do it, and really shifting it to that conversation. So it is quite powerful in that regard.
Yeah, I fully agree. And the only thing I would really add on to that is that from a pure financial investor standpoint, venture capital standpoint, timing is incredibly important of any company, any innovation. If a company comes out with a new innovation and tries to create a company when the market isn't ready for one reason or another, whether it be regulatory, consumer acceptance, infrastructure available to build that company, it will fail, and maybe because it was just ill-timed. And 10 years later from that exact same idea, approach, team might be successful, might have been successful. So I do think that regulatory approval, although it is still just FDA, we still need USDA. And even after that, it doesn't mean that there's just going to be cultivated meat all over the place. It's still going to be produced in relatively small quantities. I do think that will make a lot of investors who have kind of been paying attention to it, but not dabbling in it, pay attention a little bit more, because commercialization is now much more feasible and the timing might make a lot more sense.
Yeah, that's really great to hear. Yeah, and very positive for, I think, companies all around the world, because I think even very conservative countries like Malaysia, recently let's say established the launch of a Singaporean pilot plant facility for cultured meats. So they're sort of the world's first CDMO certified for producing cellular agriculture based products. So yeah, it's really, really great to hear. I'm going to just ask one more question before we move it to the Q&A, because I can see a couple of questions coming through the chat box. So please keep them coming if you have anything in mind that you'd like to ask our panelists. But what I'd like to talk about now is some of the challenges, right? And we've been, of course, very positive throughout this discussion, really sort of talking about how there are so many opportunities even within this tough, climate. And I guess the first question that I'd like to ask, and this is over to you, Lejjy, is Cult Food Sciences have invested in several startups going beyond meat, like cell cultured chocolate, coffee, collagen. So like, how does your team view opportunities in this space, in those spaces, and what are some of the challenges that they might face in this, let's say, current landscape that might be different than meat and sort of the traditional dairy, let's say, products?
Yeah, there's a lot of materials and ingredients that you would traditionally produce in a traditional agricultural method or with animal products. And that is the majority of the grocery store, even when it's not the meat and the milk on the shelves. So if you think about auxiliary products, walking into a grocery store in North America, first thing you see is shelves with dry goods. Easy example is collagen. It's in a lot of different things. So being able to invest in and support these types ingredient plays that are not meat necessarily in this industry is really about moving that everyday mission forward. Because if we really are going to create an ecosystem that supports a more sustainable future for food and materials production, we have to be able to address every product that's on the shelves and really get these new techniques and approaches integrated to consumers. And then the challenges that come with that really is where that B2B component comes in. The question you asked earlier is partnering with those larger firms. There's a lot of large firms that makes these auxiliary products. And if you're making something that's supposed to go into something else, you need to start those conversations super early because it's less straightforward to do a tasting, let's say, if you're depending on another producer to make the end product for you. You need to get the feedback from them early. And that's really the biggest difference is you end up starting those conversations pretty much right when you start versus if you're just making a B2C product where that may not apply. But we're really focused on it because we do see just the direction where a lot of different types of ingredients or products are going, that things such as coffee or chocolate might actually get much harder to produce. So we need to make sure that we have a way to either short production from a resiliency standpoint, and with that also comes the market opportunity for buyers and for these companies.
Yeah, these are really good points, especially like how to really navigate like a more, let's say, complex ecosystem, especially if you're trying to showcase a non-commercially available product, right, by using third parties. And this might, of course, raise a lot of questions to investors on, let's say, the security of your supply chain, right, and all of the intellectual property around it. I think going over to you, Laura, and I know that you've also had recent investments in Liberation Labs and Wild Microbes. What is the view of Agronomics towards the B2B supply chain, and also like touching on to these points, do you see any challenges or maybe even consolidation within this sector, and maybe some of these big, let's say, CDMOs or corporates, acquiring some of these technologies or doing sort of private licensing, right, or exclusive licensing going forward?
So I'll touch on your second question first. Our honest view is I think it's still a little too early to see this consolidation activity, M&A activity. When speaking with large, corporates, consumer brands, etc., and or various companies in their interest in this space, they want to see evidence of the regulation being de-risked fundamentally, and that means having a product selling on the market with revenues growing to something of 10 million annually. So we're not there yet, but that time for sure will definitely come, and that's our Agronomics' whole thesis is we're in it for the long run, but ideally holding these investments for 7 years. So if you think of where we are in that cycle, we've still got a couple more years to go before we truly think that will be possible. And just touching on the B2B activity. So I've highlighted Liberation Labs. As Steve rightly pointed out, 600,000 liters of capacity, that is just a drop in the ocean of fundamentally what we need for this sector. A BCG report came out stating that by 2030 we could need 10 billion liters of capacity, installed bioreactor capacity worldwide, to help address the future demand coming. And just flagging right now, there are only 61 million liters worldwide of capacity available, with approximately 15 to 20% of that actually suited for food biotech production. So we've got a long way to go, but I think Liberation Labs, Synonym, Planetary, a few names out there, all will need all best efforts to try and get more capacity available And after the 600,000 litres, Liberation Labs will be intending to hopefully stamp out, multiple 4 million litre plants in the US, in the Midwest, where water, power, sugar is 75% of the required cost is cheap. Likewise, in the Middle East, very favorable location, obviously helping to address food security, and also, very, very favorable position in terms of exports to, large jurisdictions such as India, China, what have you. Just highlighting wild microbes, which I haven't spoken deeply about yet. Wild microbes is trying to address the challenges that companies have in their choice of strains. So if you look at the precision fermentation companies that are selling products on the market right now, most are using Pichia pastoris yeast. Some may be using E. coli and Trichoderma fungal strain that Perfect Day and Onago are using. Wild microbes has some very interesting technology. It's called recombinating. Essentially, it's CRISPR for editing bacteria, but the view is of trying to find new strains that could be even, better performing. Again, helping companies get down the cost curve in terms of improving their titers, so the grams per liter of protein you're producing from the strain, and fundamentally opening up, hopefully a wide library of tools that companies can use, startups, etc. So it's a early stage, but a really interesting one. So I would keep an eye on it. Yeah.
Yeah, if I could just quickly jump in on that,
Go
just
ahead.
to emphasize how important these, the two companies that Laura just mentioned, them and what they are doing is so important to this space for a couple of reasons. So one, Liberation Labs, 600,000 liters of capacity. Yes, that's going to be a drop in the bucket compared to 10 billion that we might need. That was estimated, right? But the reality is that we're going to keep talking about large CapEx needs. VCs don't like to fund CapEx. Large banks that have project finance groups like to fund CapEx, but they also like to see things that have historical numbers that they could pull from to see that what they're going to be funding is not that risky. So Liberation Labs and any facility or company that's doing anything similar, what they're doing is they're taking doing the hard work where they're going to be proving out. Yeah, they're going to be proving this out, and then when this has real numbers to show how the economics work, then when they go to open up their next facility, they theoretically should not have to fund that CapEx. And that opens up the project finance markets, which have billions and billions of dollars. And I talk to many, many banks that want to look at this space and they're just not comfortable yet. So that's a really big reason why that's important. And then also with wild microbes and anyone that's focused on strain engineering, or strain optimization or whole process optimization, any massive improvement in yields or titers ultimately means that we don't need as much CapEx. And to make it as theoretical and simplistic as I can, if every company had a certain yield of, I'm making this up, 10 grams per liter, and that's what we need $10 billion of 10 billion liters of capacity for. If everyone all of a sudden can do 20 grams per liter, we need half the amount of infrastructure. That's a fake scenario, but that's the idea. So all of these companies may be doing different things, but they are all contributing towards this whole space being successful.
Absolutely.
Yeah, absolutely. No, thank you all for your inputs. I know we only have 5 minutes left for Q&A. So we have a couple of questions actually, so I'm just gonna go through them. Let's see, the first one is from Lisa Alias. So she asks, if you attend summits, webinars, or similar events, there is much more attention on lab-grown meat in comparison to lab-grown seafood. So her question is this trend also present in the investment world? AKA, is it more difficult for lab-grown seafood companies to get funding in comparison to lab-grown meat companies? I'm not sure which of you want to answer, but yeah, the question is open for all.
I mean, we do have a cultivated seafood company in our portfolio, Blue Nalu. It was actually the first investment that we made back in 2018. You know, we find it actually quite baffling how there's not more opportunity within cultivated seafood, noting, you know, fundamentally bluefin tuna is the perfect application for cell culture, given the premium pricing on the conventional market, retailing at $80 per kilogram. And, you know, fundamentally, that's what it comes down to, is can these companies, the cell culture companies, precision fermentation companies, get down the cost curve to be even cheaper than the conventional product. So, you know, we as Agronomics want to see more activity within seafood. You know, there's many different fish species, scallops, crustaceans, etc. So, you know, I don't think it's to say that it's necessarily harder to do. There is definitely less research in literature on seafood, just given that if you think about, you know, what's been used in pharma historically, it's often been CHO cells, Chinese hamster ovary cells, or I mean, mammalian cell culture has been touched on as well. But culturing seafood is actually being proven or seen to be possibly easier, given the ambient conditions that you know, these cells can grow in. I don't know if Steve or Lejjy had anything to add on that.
Yeah, I agree with that. There's definitely a kind of a meta thing with the capital as well. North America really likes eating land animals, and it's kind of like a historical artifact of where the original trends and where some of the attention started, because the US really likes burgers. So you could argue that has played a part in it. It's definitely changing now that the industry is growing. And definitely the other part, to reinforce what Laura said, there's a fundamental research on a lot of different types of seafood items just didn't exist. So companies were starting from scratch, and it eventually has become part of their IP. But that was a huge part of it, because you could not just go look up lobster cells and buy them. To use a real example, it's been a barrier as well.
Great. Okay, we have another question. This is more towards, I guess, evaluations. So Alex Chandrovsky is asking, how do startups justify valuations to an investor today? In light of Tofurky's acquisition at 1.25x, how do you help your portfolio companies consider a down round? And this is a question for all as well.
Yeah, I mean, that's a really good question. And I think that it matters, like, well, it's kind of multiple questions. How do we consider valuations, and then how do you consider a down round? But like the valuation aspect, like valuations have been off. They've been too hyperinflated for the past however many years, up through the end of 2021. So what we're seeing now is valuations are becoming more realistic. And this should be really more of a discussion, but like that's between both the investors and the startups, where it shouldn't be dictated by one under the other. But if it, like, for the way I see valuations, I look at everything from a potential exit opportunity. What could it exit at? What are the multiples that it could exit at in a certain time frame? And then I try to back into what the valuation could make sense today. So, but it's also important for investors to walk the founders that you're talking to through that, so they understand where you're coming from, and they understand you're not just trying to get a good deal or something, but that you actually do or do not think that the numbers make sense based on the business that they're building. And all the exit multiples and all that that varies depending on if you're building B2B, B2C, a meat company, enabling tech company, an ingredient company. They're all different. But that should all be part of the discussion. On the down round stuff, that's a tough conversation to have, but at some point it's what will get more money in the door and keep the business going. And if a certain valuation helps make that happen, then that could be the answer between keeping the company going versus not.
Okay, I think another question that we have is from Maximiliano Morea. So he asks, when do you expect to see alternative proteins, be it cell-based or even hybrids, on the retailer shelves?
It'll be sometime.
Sometimes, yes, sometime soon. No, but I mean, maybe this is not answering the question, but I am very excited to see the USDA, approve either, well, it's looking like Upside or Good Meat being the first company to start selling. Obviously, they'll be in restaurants to begin with, but in the US, that is a tremendous major milestone that will really, help drive this industry forward. And I mean, products will be more expensive than conventional to begin with. Obviously, cultivated meat companies can benefit from the hybrid approach, including plant-based protein to help compete with the conventional. But in time, when scale has occurred, we will be seeing these in, I mean, the Whole Foods, which is a kind of Sprouts equivalent here in the UK first, and then hopefully, getting down to the Tesco's, the Walmarts, etc. So it's coming, it's happening. But yeah, definite date unclear.
Lejjy?
Yeah, I would. The extra color I'd add is it depends where you live. There'll definitely be some availability, I would say, within the next 2 years, but it really does depend on where you live and how you want to get it. Whether you live near a restaurant or near a specialty grocery store, the future remains to be seen, but it is definitely coming.
Steve, your last thoughts?
Yeah, I mean, I agree with both what Laura and Lejjy said. Nothing majorly different. I think just set expectations accordingly. Even if everything got approved today, it's still going to be in relatively limited quantities relative to the 350 million metric tons of meat that's out there, plus the 200 million of seafood that's out there. It's going to be very, very, very tiny in the beginning compared to that, and that'll change over time.
Yeah, I totally agree. I would probably give it 5 years to see it in more whole food markets globally, and then another 10 to see it on the mainstream retail market. But absolutely, there will be hybrid products out there. And yeah, we're really excited and really happy to have all of your inputs today. Thank you so much to all of our amazing panelists for sharing your investor perspectives and for also shining a bright light on cellular agriculture investing. Thank you everyone for your attention. Sorry we couldn't go through all of your amazing questions, but yeah, stay tuned for more amazing panels at the Cell Agri Conference. Over to you, Ahmed.